the one thing that struck me is let's take a look at where financial crime is with 2020 economies, because I suspect as the major economies tank and financial crime grows, it'll move up that ladder to 5th or 4th place. But there was one question that came in that maybe you could address very quickly, and that is, how do we fix AML biases, AML issues in selected industries without introducing regulatory hurdles? And so that sounds to me, I won't put words in your mouth, but it sounds like something where the whole idea of what you're doing is to help avoid that.
Yeah, it's a really good question. We get the bias question an awful lot. So this comes back to this human supervision part. Now, you will always be able to put bias in an artificial intelligence if you really want to, right? But what AI does is it makes it really difficult. So for example, let's say the AI learned a bias from your previous disposition cases. The supervisor would then need to approve that learning. And then when the cases are quality checked in the future, that would also have to be missed. So it is really difficult to put bias in AI. It almost requires intent as opposed to ignorance. What is far more likely to happen is the AI will learn the bias and the operator will say, I don't want you to learn that. I do not want you dispositioning alerts in my firm with that learning. And let me find out where you learned that from, because I want to go and talk to those analysts because they're not quite solving these alerts according to policy. So AI doesn't have a sense of good or bad. You tell an AI what success is, and it will do that. We had a case recently where the AI learned that 4:30 on a Friday was a really good time to disposition something as false positive. Right? People wanted to go home. So the AI presented that learning. AI is all excited. I can solve another 1 million alerts for you if you approve this learning. What the operator said, hell no. Do never solve an alert based on time of day. So the AI was not given permission to use that learning. It will never solve alerts using time of day as a factor. So the real-time access and the dual approval nature of the learnings, I think, makes bias detection much easier. Does that answer the question?
It does for me. I think that's very helpful. Thank you very much, Matt. So,
and if that was your question and I didn't answer it, please call me out.
Okay. So to progress through the agenda here, I think, one observation I've always had with respect to motivation for fighting financial crime, there was really two. One is that financial crime, money laundering, terrorist financing, it's really the grease that makes crime move. And so, even when I was in law enforcement, I understood, the bad guys fear us, but what they really fear are the banks and now the other financial institutions, because if you choke off the flow of money, then there's no point in doing the crime in the first place. So people that are sitting at a desk at a bank or a pawn shop or wherever it may be, they may not realize it, but the bad guys are counting on them to not take this seriously, because once you cut off the money, then they've got to go find something else to do. So that's one. But the other is, and this is being experienced by a number of jurisdictions, there is a real impact of financial crime on the jurisdiction's economy and its trade. And so we're very fortunate. Adam Yavitsi, who's the executive director of our host, the World Trade Center, is going to tee that up for us. He's going to discuss the impact of international financial crime, money laundering, and cybercrime on trade and economic growth in Africa. So with that, I'll turn it over to you. Go ahead.
Thank you, Scott. And I think our program is going very well. So much insight being delivered by our panelists. So I'll make my presentation really brief. I'll talk about the impact of, are you able to see my screen?
Not yet.
We see you, but we don't see your presentation.
Okay.
Adam, I do see a couple of questions coming in. Should I answer those while you're?
Yes. Go ahead and do that.
Thank you. So Juliet, I see a couple of questions from you. First question was, the AI does what its programmer asks it to do. Does this not limit the capability of the AI to know how far the operator thinks or how much the operator knows? That's a really, really good question. So that means I didn't quite explain it properly. Eden, would you like me to answer the question? Do you want to just jump into yours and I'll answer it later? Well, let me just, I'll answer this one question.
Yes,
Juliet,
answer the question. I think my screen shows now, but.
Yes, it does. And then Juliet will do your second question later on. So the operator, the impact the operator has is this is what you must prove to adjudicate an alert true or false. Now, the AI can find many, many different ways to get to that proof. I am sharing some screenshots later on. Maybe I can share those, and if that doesn't cover your question, then we can chat a little bit later on. Adam, over to you.
We like to put these three items, international financial crimes, cyber fraud, and money laundering, into a bracket, and for the purpose of this presentation, refer to them as the 3 L's. So you're going to hear me say the 3 L's every now and then. The first thing I'd like to say is that the global financial system is very integrated. It's like a network, and a network is like a chain. And as you all agree with me, a chain is only as strong as the weakest link. And financial services providers, banks, and so on in Africa are fully keyed into the global financial system. And so if a chain is only as strong as its weakest link, then it means that if the system is weak in Africa, then the entire financial system is weak. And so globally, and so it doesn't make any sense for the world to focus on improving the strength or enhancing the security of financial systems in the developed world and ignore Africa. One reason why Africa is very key in the discussion of the 3 L's is that Africa has become a target for transnational financial crime rings. That is because, for instance, Africa is a resource-rich continent. There are mega deals being done here, and most of these deals are shrouded in opacity. There's ineffective regulation and enforcement, and Africa is a potential safe haven for international criminals. We're talking about a continent of 54 countries with not so tight borders. Borders are quite porous, and what happens is that the address systems are also quite weak, so it's easy for people to just get lost in the system. We like to say that Africa is like the Wild West of the financial system, global financial system. There's also a lack of unified definition of what qualifies to be called an international financial crime, and this is a big problem in Africa. I'll just give an example of how Africa plays a big role in what happens in the world of international financial crime. In 2019, in the first 7 months alone, the FBI received 14,000 complaints amounting to $1.1 billion worth of crimes, financial crimes. And these were linked to business email compromise scams. There were some arrests in that year, I think in August or so. And out of the 80 people that were arrested, 3 of those individuals who were ringleaders were based in the US, were US citizens, but as many as 77 were based in Africa, doing all the dirty work for the masters abroad. So Africa does play a key role, and Africa needs to be watched if the world intends to tackle this problem of the 3 L's. I'd also like to say that per KPMG's AML survey, 92% of banks in Africa listed money laundering as high risk. The cases of international financial crimes are growing faster in Africa than anywhere else in the world. So what are the effects of the 3 L's on trade, on prosperity, on economic development in Africa? The first thing I'd like to say is that the prevalence of financial crimes is usually a manifestation of more serious activities such as drug trafficking, weapons smuggling, terrorism, tax evasion, massive corruption, and theft of public funds. So because the international financial crimes are so prevalent, it is safe to assume that a lot of these things are happening on our continent, and we cannot stress enough the negative impact of these activities on all facets of our lives. Another thing that I would like to say is that the typical reaction of the global financial system to cases of international financial crimes in Africa is to try to cut off Africa or to avoid Africa. And the effect that this has is that it tends to make Africa poorer, and it takes away resources from Africa that Africa would need to lift itself out of many of the problems that it finds itself in. Africa is like the Wild West of the global financial system. It is much feared, it is little understood, and it is greatly stigmatized. Some examples that I would like to put before before this webinar is the example of PayPal, for instance, which does not avail its payment platform to many countries in Africa because it simply does not understand Africa and does not think Africa is worth bothering about. However, PayPal is an important payment platform that could promote trade and could help a lot of Africans lift themselves out of poverty. I used to run an international export and import firm, and we used to get a lot of our business from Alibaba because it is still the largest B2B export and import platform. And if you're not a gold supplier on Alibaba, you're really just wasting your time because you don't really get the business of it. So a few years ago, it was open to Africans, but because of international financial crimes and Alibaba's inability to verify suppliers and verify customers from this part of the world, they simply cut out Africa. And today it's impossible for an African to become a gold supplier to supply commodities on that platform. And that's just another way that the global financial system or players in it simply cut out Africa if they cannot understand what the problem is with the continent. Another effect of these three ills on Africa is that it promotes institutional decay, and this deters good investment. Deterring good investment in the end leads to entrenching poverty and underdevelopment on the continent. International financial crimes also pour resources into the hands of terrorists. So in the long run, it leads to violence, war, and civil strife. As I said before, these actions deepen seclusion of Africa and entrench poverty. But the question that is very important for all of us to ask ourselves is whether Africa is a victim or an offender, mainly when it comes to international financial crime. And I'd like to suggest to all of us that Africa is more of a victim than an offender because some research done, for instance, by the African Development Bank and the Global Financial Integrity point to the fact that over a 30-year period from 1980 to 2009, between $1.2 to $1.4 trillion worth of illicit financial flows left the continent of Africa. And this figure far exceeds what Africa received in terms of overseas development assistance and foreign direct investment. So on the net, Africa loses money to the West due to international financial crimes. One interesting finding from this research also was that 60% of the international financial crime related to Africa did not happen through activities that were easily detected as crime. Most of the international financial crime, money laundering and so on, happened through trade mispricing that was conducted by mainly global multinationals operating on the continent. There are also other activities like parallel trading and gray trading, which are very difficult to monitor and record. But these were the main causes or main channels of money laundering and international financial crimes on the continent of Africa. The United Nations Economic Commission for Africa also put the annual figure for illicit financial flows out of Africa to something between 50 to 80 billion US dollars. Again, this figure far exceeds what Africa receives in terms of overseas development assistance and foreign direct investment. And so ultimately, we can conclude that international financial crimes are inextricably linked to poverty, to underdevelopment, and to the breakdown of social and governance institutions, to war and civil unrest on the continent of Africa. And what Africa needs more than just giving of aid It's for the world to protect Africa from international financial crimes so that Africa is able to lift itself out of the situation it finds itself in. And this is why the World Trade Center Accra would like to come to why we got involved in this topic. We are a private trade and investment facilitation firm. We are part of a global network of 330 World Trade Centers around the world, headquartered in New York. We've been involved in trade facilitation since 2008 in Ghana. And our goal is to promote prosperity through trade. And as I've demonstrated in my presentation, to promote prosperity through trade, we have to tackle this issue of international financial crimes. So the World Trade Center Accra does a number of things. We have a trade missions department. We're constantly sending trade missions from Accra to countries around the world and also receiving trade delegations from around the world, business delegations focused on all sectors of the economy. We have a business club, which is a local network that is keyed to the global network of World Trade Centers around the world, where we try to help local businesses find opportunities around the world. We have a trade services department that actually facilitates trade. So we're very involved in trade. And this webinar is happening as a result of actions taken by our events management department. Of course, if you live in the city of Accra, you cannot miss the World Trade Center Accra building, which is about the tallest building in the financial enclave. We have some subsidiaries. One of our subsidiaries is that on the far right, you see is the World Trade Center Digital Services Limited, which is contributing to the digital transformation of Africa. So we have a wide range of digital services, and this is why, for instance, we are carrying out this webinar also because we want to have the opportunity to interact with issues of money laundering and cybersecurity, and to see what technologies we could be promoting on the local market. In conclusion, I would like to use this opportunity also to invite all our partners again and to all participating, all participants in the audience to our upcoming Africa International Financial Crime Week, which will be a much more expansive event in 2021 in May. And I hope that you'll take advantage of this to support our effort to eliminate these three ills from our continent. Thank you very much. And I'll throw it back to you, Scott.
Thank you very much. I think just a couple of very quick observations. The challenges that you point out for Africa, they're big and they're real, but it probably doesn't need to be said, but I'll say it anyway. The same problems occur other places as well. I've seen very similar challenges, South America, Asia, Central Europe. And so, the question is, how do you go about addressing it? But what I don't know why this never really struck me before, but you've made a very good point, and that is, in all of those regions, including Africa, there is, for decades, there have been efforts to provide aid to help uplift the economy, uplift the people there. And all of that is great, all of that is necessary, but if you've got a problem with financial crime that's siphoning out funds as the aid is coming in, through corruption or financial crime, whatever the case may be, all you're doing is pouring money into a bucket with a hole in it. And so addressing financial crime for financial crime's sake is important, but it's also a necessary step to making all the aid money more effective. So, as I said, maybe I'm just too old to have made that direct link, but you did a very good job of that, and I appreciate that. Our next distinguished guest is Mr. George Nkrumah, who is the head of the Financial Integrity Office of the Financial Stability Department at the Bank of Ghana. And he's going to provide us the perspective of a central bank on the challenges that we've all been listening to here. And I think we can't really have an effective discussion of all that's going on without the perspective of somebody like Mr. Nkrumah. So with that, I'll turn it over to you.
Good afternoon, Scott and fellow panelists and participants. I am going to talk about these issues from the perspectives of the central bank. And what I'm going to say will be a general presentation, but as a country, most of these things also pertains to our situation in Ghana. As you all know, central banks' main objective is to formulate and implement monetary policies and to ensure price stability and contribute to the maintenance of price stability and ensure sound payment systems. So anything that will happen that will distort any of these is a concern to the central bank. My presentation will try to be very brief with the presentation. I'll just give a brief introduction, talk about some challenges in the cyberspace, and then challenges in the developing countries, and then regulatory intervention, and conclude. Financial crime over the years has been increasing and becoming a concern to most government and central banks throughout the world. This concern arises from a variety of issues because of the impact of financial crime on the socioeconomic status of the populace. As I indicated earlier, anytime there's an inflow into the economy that the institutions are not able to account for, it may have an impact, but appropriate mitigation measures or planning will not take place on those things and therefore distort most of our plans. If money laundering and cyber fraud are not checked, it leads to the integrity issues in the country. Due to the high integration of financial and capital market, money laundering can also adversely affect currencies and interest rates. And let me say here that Ghana, we've been having serious challenges as far as controlling our exchange rate. And one of the major factors is because of some of these illicit flows that the central bank cannot anticipate. In 2018, the World Economic Forum noted that fraud and financial crime was a $1 trillion industry, reporting that private companies spent approximately $8.2 billion on anti-money laundering and fraud controls alone. Of course, anytime new typologies arise in the financial market, appropriate measures are put in place, and all of these things have cost implications. Crime themselves, detected and undetected, have become more numerous and costly than ever. Risks for banks arise from adverse factors, including vulnerabilities to fraud and financial crime, inherent in automation and digitization, massive growth in transaction volumes, and the greater integration of financial systems within countries and internationally. Cybercrime and malicious hacking have also intensified in the domain of financial crime. And as regulators, we are always ensuring that our licensed institutions comply with these with the requirement, ensuring that they put in place appropriate measures to mitigate some of the fraud and then the money laundering in the system. Currently, the central bank requires all banks to put in place some monitoring systems to ensure that any suspicious or any unusual transaction is investigated to ensure that people do not use the Ghanaian system to launder money or for Ghana to become a money laundering haven. Cybercrime footprints across the developing world are also getting bigger. People, hackers, fraudsters, etc., will always look for the weak link, try to explore the situation. And at times they see Africa and some of the other developing countries as appropriate avenues to channel their illicit. As a result, there's a need for developing countries like ours to always put in place some of these measures to avert money laundering, international crimes, and cyber fraud. in terms of the cyberspace, it is becoming a very complex situation. You know, Ghana, currently we have the internet banking, we have the cards, various cards, we have the money, mobile money, we have all sorts of products, fintech products that are coming into the market, and all of them interrelated one way or the other. So you can sit in the comfort of your home and transact banking business just on your phone, on your computer, or a card transaction will directly hit your account without going to the bank premises to transact those businesses. This situation has become very complex, and as developing countries, a lot of people are financially illiterate and do not understand the workings of some of these devices and fintech products that are coming into the market. And this has become a worry to the central bank, trying to intensify education for the public to be aware of the workings of these products. As part of our mandate, we ensure that before a bank introduces a new product, they identify the risks associated with those products and ensure that appropriate measures are put in place to mitigate the risks that have been identified. And we monitor them and ensure that these fraud do not occur. Because of the complexities involved and the low literacy rate as far as financial transactions are concerned in our systems. And because some of these products are using internet and other devices, they are mostly non-face-to-face. And there's a high possibility of falsification of identities. Some of the fraud reports that comes to us indicate that people use fraudulent identifications to open an account, transact a business, and get off. So that when it comes to investigation, it is difficult to identify these people because they use a false ID to open an account and transact the business and then leave. And it becomes very difficult to arrest or to even investigate. Another area is structured payments. People know that once you report it, you do a transaction beyond a certain limit, they will file STR or CTR on you. They try to do structured transactions and therefore making it difficult to detect such transactions. We've therefore requested our financial institutions to put in place systems to identify such structured transactions accumulated at the end of the day and flag them for investigations. And then others also do transfers through banks in offshore countries with customer identities protected from our jurisdiction. So they do the transaction elsewhere and it will hit an account here, and following such transaction is extremely difficult. Hacking has become a very topical issue in Ghana. Recently, we've received some hacking reports from our financial institutions where people are able to hack into the systems and then undertake some transactions that are not authorized by the various institutions. Another area in this space is Hawala, this traditional system of transferring money used among countries whereby the money is paid to an agent and then instruct an associate in the relevant country or area to pay the financial recipient. This is another area that has become a concern to us. You go to some areas in our cities and you can just transact a business which the central bank will not be aware. Meanwhile, we are supposed to be aware so that it forms part of our policy formulation. Now, the core of our presentation is how does these financial crimes and cyber fraud and money laundering, how does it affect us as developing countries? As I indicated earlier, The central bank, in conjunction with the central government, are in charge of formulating policies. Whilst the central government is in charge of the fiscal policy, the central bank is in charge of monetary policy. And to formulate some of these policies require accurate data that can help our economic statisticians to do appropriate predictions and come out with policy directives. But once these things that are unpredicted hit the economy, it has some challenges as far as our countries are concerned. And the first one I want to talk about is undermining the integrity of the entire financial market. Financial institutions that rely on the process of crime have additional challenges in adequately managing their assets, liabilities, and operations. For example, large sums of landed money may arrive at a financial institution, but then disappear suddenly without notice through their wire transfers in response to non-market factors, such as law enforcement operations. This can result in liquidity problems and runs on banks. As you all know, financial institutions, once you deposit your money, they also on-lend it to their customers. But because the money may have come in because of fraudulent activities, they quickly come for it. Probably at the time of coming for that money, you have already on-lend it to your customers. And this creates some liquidity problems for our financial institutions and therefore some distortions in their integrity. The second one we want to talk about is economic distortions and instability. I think this one is closely related to the first point that I made. Money launderers are not interested in profit generation from their investments, but rather in protecting their proceeds. Thus, they invest their funds in activities that are not necessarily economically beneficial to the country where the funds are located. That is, they at times undertake frivolous transactions just to launder the money and then quickly get out of it, and therefore causing instability in the economy. Another area is monetary policy implications. The central bank and Bank of Ghana, for that matter, is in charge of the monetary policy aspects. And money launderers can adversely affect currencies and interest rates, as launderers reinvest funds where their schemes are less likely to be detected. You know that to set interest rate, the prime rate, etc., depends on the projections that are made by the central bank. Once you set the projection and some of these fraudulent activities takes place in the economy, it virtually nullifies all your projections, and at times there's a high probability that you miss your target because of some of these unpredictable behavior of fraudsters. Another area I would like us to look at is undermining the legitimate private sector. The private sector, their major motivation is for making profits. The money launderers or the fraudsters, their main aim is not.
So what we were trying to do earlier, and we have to stop, was to
Hello?
present you.
Hello? One of the most serious microeconomic effects of money laundering is felt in the private sector. Money laundering often uses front companies which commingle the proceeds of illicit activity with legitimate funds to hide the ill-gotten gains. These front companies have access to substantial illicit funds, allowing them to subsidize front company product and services at levels well below market rates, and therefore sort of crowding out the private sector, whose main motivation is to make good business and to make profits. Once this is done, it affects that sector of the economy, and its impact will be on the overall economy of the country. As indicated earlier, another area is loss of control of economic policy. And this has been a dilemma in most African countries, in the sense that you initiate policy, but at the end of the day, you are unable to achieve your target. In some emerging markets and developing countries, these illicit proceeds may dwarf government budgets. We have situations where illicit flows can virtually dwarf the government budget and therefore make useless of the government's annual budget projections, resulting in a loss of control of economic policy by government. Indeed, some cases, the sheer magnitude of the accumulated asset base of landed proceeds can shadow government budget and thus defeat government policy objectives. Another area that is of concern as a central bank is the socioeconomic implications. Among its other negative socioeconomic effects, money laundering transfers economic power from the market, government, and citizens to the criminal, in the sense that if the appropriate controls are not in place, then the criminals will take a center stage and do things at the detriment of the economy. And at times, when countries like Ghana experiencing exchange rate depreciation, investigation shows that some of these factors play a central role. The next point I want to talk about is risks to privatization efforts. You know, gradually government is let go some of its state-owned institutions, and at times you will see money launderers, fraudsters coming in to acquire these properties, not for economic gains, but just an avenue to launder their illicit funds. So you have a situation, we have a situation in Ghana where state-owned enterprises have been sold to some private entities, and it will be there for some time, virtually dormant, and then all of a sudden they decide to sell it so that it becomes an avenue to launder money or some of these illicit flows into the Ghanaian economy. The last one I want to talk about is reputation risk. Once a country is tagged as an area of illicit flows, you lose your reputation. As you all know, just by being on the grey list of Financial Action Task Force, in some countries, the European Union, for example, has indicated that they are going to list us on their list of countries with strategic deficiencies in their AML-CFT setup. When that happens, it will affect the corresponding banking arrangement for our banks, and any transaction that will be done between our institutions and foreign institutions, especially in the EU, will be difficult, since they are going to apply enhanced due diligence on every transaction that they do with us, and thus raising the cost of doing business with the international community. This is an area that the government is very serious about, and my colleague from the Ministry of Finance indicated it is being handled at the highest level of government, where the Interministerial Committee is handling this issue. We are trying as much as possible to get off the grey list so that this thing does not materialize to affect especially our financial institutions and the reputation of Ghana. One thing that I think ML also talked about is Ghana is the first country in the sub-region, and therefore people think that probably we are not doing well. We are doing very well, just that we were the first country in the sub-region, and we are trying as much as possible to set the pace for our sister countries to ensure that they also follow the same path. Regulatory intervention. We have identified some of these challenges that confront our economy. And as a country and as a central bank, we've tried very much to intervene. We have strengthened our supervisory role, ensuring that all our licenses comply with the laws and regulations of AML. We've tightened our on-site and off-site activities, ensuring that all our institutions comply fully and ensure that fraudsters do not use our financial system to launder money. And to ensure that we collaborate, the Bank of Ghana has sponsored the formation of a committee. We call it the cooperation between law enforcement agencies and the banking community. This is a group, we call it the COCLAB. It's a group of experts from the relevant stakeholders, the central bank, from the banks, from law enforcement, from the judiciary, etc. And we meet periodically to share information and to ensure that if there are prosecution, for example, if there should be an arrest, etc., we cooperate amongst ourselves to ensure that these cases are handled expeditiously. The COCLAB aims at enhancing cooperation between law enforcement agencies and the banking community in the fight against fraud in the financial sector. This collaboration is aimed at speeding up investigations, prosecution, sentencing, and confiscation of all fraud and AML CFT related matters. The members of this COCLAB includes nominees from the National Communication Authority, Ghana Association of Bankers, Judicial Service, Bureau of National Investigations, Economic and Organized Crime Office, National Security Council Secretariat, Financial Intelligence Center, Ghana Police Service, and the Bank of Ghana. We meet periodically, brainstorm on topical fraud issues and how to handle it and how to cooperate amongst ourselves to ensure that we have some measures to mitigate its occurrence. Another area is Bank of Ghana has recently put in place a 24-hour monitoring system known as the Cyber Incident Event Monitoring System, SEMS. SEMS is expected to monitor irregularities in transactions and logins in the banking sector. What this system seeks to do is, once a fraud happens in any of our licensed institutions, they are reported immediately to a central point, and then if there's a need for quickly disseminating this information, it is done to alert other participants in the economy so that they also be on guard to ensure that it doesn't happen to them. So it's a sort of an information sharing system, and also ensuring that we at the central bank is aware of whatever is happening. And if we have to come out with policies and we have to come out with directives to forestall such occurrence, we do it expeditiously. Now, there's an emergence of new payment streams. A lot of them are coming up on a daily basis. Financial institutions are partnering with other institutions globally and coming out with new fintech products in the market. This is an area that is of interest to us, and to make sure that it is properly regulated, Bank of Ghana passed the Payment Systems and Services Act 2019, Act 987, to provide legal and regulatory framework for the orderly development of the payment system. So that this law ensures that before a company is given approval, it passes through some procedures and ensure some due diligence is done to ensure that we don't get fraudsters in our system who will deploy products and services just to defraud our citizens. So this act is also currently in use now. Finally, we also have the FinTech Office that has been established to oversee the licensing and supervision of all FinTech products in the country. And any product that is introduced goes through a procedure where an assessment is done to ensure that all risks identified with a particular product has appropriate mitigation measures in place to forestall any fraudulent activity. Some recommendations that we will give to participants is there should be general control and security in a security environment. General control and security environment should be strengthened in every financial institution. Everybody should make sure that whatever you are doing, you have some security at the back of your mind. Also, specific controls and security measures for e-payment method on case-by-case basis. The first point is a general one, but the second one is specifically to each product that will be introduced into the Ghanaian economy. And then customer awareness, education, and communication. From 2018 up to date, Bank of Ghana has intensified its public educating the general public about some of the products that are coming into the market. And in fact, we've also instructed our institutions to continually educate their customers to be aware of all the features of the product that they introduce to the Ghanaian economy. And also invest in top of the range fraud detection and prevention solutions. As I indicated earlier, we ensure that all banks, savings and loans, finance houses, we are gradually rolling it down to the rural banks to put in place some monitoring systems that will throw out some alert if there are unusual or some suspicious transactions in their systems. Effective CDD at all levels in the transactions. We always say that for AML and fraud detection to be effective, there should be an efficient CDD procedures in place to ensure that the customers that we deal with, we know them very well, and that they will not use the system to do any fraudulent activity. These are some few recommendations that we will give. In conclusion, countering cybercrime and money laundering can save lives, grow prosperity, and build peace by strengthening law enforcement capacities and partnering with businesses so that they can be part of the solution. We can go a long way in ensuring that the internet can be a force for good. We can use the internet for our good instead of using it for criminal activities. On that note, I want to thank all of you for your attention. Thank you very much.
Thank you very much as well. I think, it's one of these things where you take a step back and you see how much, with all the challenges that are out there, how much work stands before the central banks. And again, I'm just very impressed with all the work that's being done here. But this, of course, it's a war that has to be fought on many fronts. So there's the regulatory aspects, and maybe I shouldn't be saying fought on many fronts, but with different weapons. One of the things that we've heard over and over again is that regulation is part of it, but technology is a key part. And so we're going to hear a little bit more now about what's actually out there. We can talk all we want about technology, but what are some of the solutions? And we're first going to hear from Mr. Marcus Swanepoel, who's managing consultant at Temenos, and he's going to talk to us about the processes for detection and solutions, due diligence, and some of the more practical aspects of all of this. Marcus has been around for quite some time in this area. He's, as I mentioned, he's a managing consultant at Temenos. Previously, he's worked in roles with well-known firms like Standard Bank and Oracle. After Marcus gives his presentation, we'll also hear again from Matthew Leaney. So with that, I'll get out of your way, Marcus, and let you go ahead and speak now.
Thank you very much, Scott, for that introduction. Let me share. Yes, thank you very much. Let me share my screen. Right. Can everybody see my screen?
Yes, we see it.
Excellent. Are you seeing the presentation view?
Yes.
Brilliant. Yes, and thank you very much for that introduction. As Scott said, I work for Temenos. I'm a managing consultant in the pre-sales division in Africa. And today I want to talk to you a bit about just some of the solutions that are out there for terrorist financing, monitoring, anti-money laundering monitoring, and KYC. So just a quick agenda, just some background. I want to talk a bit about some of the solutions that are out there, and then just talk very briefly about some of the solutions that Temenos offer in this regard. So a bit of background, and some of these statistics have been mentioned by a lot of the panelists and the presenters today. But it really warrants just repeating some of these. At least 1.6 trillion US dollars is laundered through the global financial system each year. And only 1% of money laundering illicit flows are intercepted. So clearly, and there is a very big problem in terms of financial crime across the globe. Before the advent of the digital age, there was only a few channels to monitor. We had call centers, branches, maybe you would have an agent out in the field that would be doing transactions. So there were fewer channels to monitor in terms of financial crime activities. So as the world is moving to the digital age, there are more channels to monitor, as you can see on my screen now. In terms of mobile internet, we've got chatbots, etc., APIs. So there are a lot more channels to monitor, meaning there's a lot more opportunity for financial criminals to actually take advantage of that. But still, from that, we are very slowly moving to the advent of the open banking age, where banks are connecting with third-party providers, and banks are enabling this via APIs, exposing parts of their system to numerous channels. And you can see on the left here, these third-party providing channels, they actually multiply the channels that banks need to have a look at in order to battle and mitigate against financial crime. So managing financial crime is actually more important than ever. Regulators are cracking down harder. The personal stakes are higher, as in lots of cases, banking executives can be held liable for some of these misses as part of banks. And then one missed transaction can be catastrophic. There are cases of financial institutions that have lost about 20% of their market capitalization because of associated fines, because if a bank gets a fine, that drops and dents the trust that the public has got in that particular bank, which obviously has a net impact or a knock-on impact in terms of their share price and therefore their market capitalization. So what are some of the solutions for the prevention of financial crime? So there are broadly four pillar solutions that are offered across multiple vendors. There are fraud solutions in order for fraud, internal and external to the organization or to the bank. We have your anti-money laundering monitoring solutions, sanction screening solutions, and then lastly, KYC solutions. Today, I'm going to talk about three of these, talk about anti-money laundering solutions, sanction screening solutions, and then I'll end off with a brief discussion on KYC. So I'm going to start with sanction screening. So sanction screening is the process of checking names of customers as well as transactions of customers and checking them against sanction lists. Obviously you get public sanction lists, and then also banks and organizations, they want to have their private lists as well that contain details of customers, like blacklists, customers in their region or in their country that already have been flagged for various behaviors. In addition, PEPs or politically exposed persons also fall into this particular category. In addition to the customer, as I said, screening, payments are also screened, so you can screen payments from customers or to certain customers, looking at certain missed payment details, as well as customers who are trying repeatedly to do a certain payment attempt. There are various screening methodologies out there, and I'm just capturing some of the most common screening methodologies that are employed by screening solutions. So we get literal analysis, which is really the standard name comparison of a particular customer name to a sanction screening name using aliases and various permutations. There also is what we call relaxed pattern matching, is where the words are compared to a particular match, and there's a tolerance for approximation. As you can see on my screen here, what I've done is I've put my list on a watch list, and then you get messages coming through, and then obviously as my name changes, your match obviously changes as well. And then as an organization or a bank, you can then set the tolerance that you are comfortable for in terms of that particular match. Also, a very important a methodology and feature that is applicable to sanction screening is multi-character handling. Clearly, when we talk about English, etc., that's stock standard, but clearly there are lots of different characters out there in terms of Cyrillic, Arabic as well, and then obviously Chinese. So it's important that a solution can handle multi-character analysis. Also, lexical analysis is the next feature that I want to talk about. What is lexical analysis? So what that is really using the pieces of information around country identification codes, financial institution identification codes. So as a particular message comes through and there's a particular ISO code as an example, or a particular BIC code, which is a bank identification code, the system should be able to match that particular BIC or that particular ISO code to a particular country or embargoed region that is on a sanction list. FATF screening, I think several of the previous presenters spoke about FATF screening, and this really relates to the FATF recommendation 16, where it says that to comply with FATF recommendations, one must identify and validate the following bullet points. So an account number must be valid or must be present and valid. The name and address must be present and valid, and the location must be present and valid as well. So it's important that obviously to comply with this particular FATF recommendation, solutions are enabled with this particular feature. The last screening methodology I want to talk to you about is a process called stripping and circumvention. So what that means is that stripping is the attempt to circumvent sanctions by deliberately changing something in a submitted message. So as an example, a a person submits a particular payment that goes to, let's say, an embargoed region, and a particular bank that picks up that this payment is now going to a particular embargoed region. So what these fraudsters will do is that they see that, and then they will resubmit that particular payment, same amount from the same place, but they might reroute it somewhere else. And what this technology does, it actually uses AI to do the actual analysis on these transactions, and to see when a specific transaction is being stripped and circumvented for the particular bank's fraud department. So those are some of the methodologies that are common across vendors and vendor solutions that offer solutions for sanction screening. The second block, or the second topic I want to spend some time on, is anti-money laundering monitoring. So AML monitoring is something that's obviously been around for a very long time, and it has to do with the monitoring of accounts, customers, third parties, and groups. There are two parts to AML monitoring. So firstly, rules-based monitoring, which really relates to setting up certain rules in the system that can catch certain behaviors. So as an example, we could set a rule in the system that says that if a particular customer does a transaction and the total amount of that particular transaction is greater than the average of the transactions that have been done for the past month, trigger an alert or stop the transaction in real time. That's an example of rule-based monitoring. Then peer group profiling monitoring is also one of the mechanisms that is used by some solutions. And what it does is that the solution creates peer groups, and then once a particular group or a customer in a particular peer group that has been created does transactions or does behavior that is outside of the behavior of that peer group, it will also then generate a particular alert. Most anti-money laundering solutions, they need to be integrated clearly to a core banking system. Generally, they are separate to a core banking system for performance reasons. And these integrations can be batch or real time, depending on the type of alerts and the type of transactions and behavior that needs to be monitored. That integration can be one or the other, or both. So the last topic I want to discuss today is know your customer. So know your customer, KYC is an ongoing and a full ongoing process. So what I've got on the screen here is sort of 5 steps. Basically the onboarding of a particular customer. Then there's a process where the particular documentation for that customer is validated. And then you get sort of the back office process here. So a lot of times when you refer to KYC, people think it's origination activity. It's an activity where you collect certain information and you validate that, you store that away, and then that's the KYC done. But in fact, KYC is actually that and much more. Know your customer also has got a very, very big impact on your back office processes. And what I'm referring to here is things like screening of customers for sanctions and PEPs, doing a risk rating on a particular customer that you can categorize your customers in high risk, in medium risk, and in low risk. This enables you to focus your attention, and there's been a lot of mention made today about enhanced due diligence. So clearly, we don't have the time to actually do due diligence on all of the customers in an enhanced way. what risk rating and categorization will do for you is it allows you to ring fence those high risk customers. And then those high risk customers, you can then focus all of your enhanced due diligence on, so that you can focus all of your efforts on those high risky customers that will most likely cause you problems in the future. So talking about Temenos solutions. So all of what I've spoken about today, AML, sanction screening, and KYC, Temenos provides solutions for. Our anti-money laundering solution is called Profile. Our sanction screening solution is called Screen. And then our enhanced due diligence module is called Know Your Customer Plus. So a very brief description of each, and I'm sure these decks will be made available. And I've said screening is our sanction screening module that allows customers and payments to be screened against sanction lists, PEPs. Profile is our behavioral management transaction monitoring solution for the detection of anti-money laundering. And then lastly, Know Your Customer Plus is our risk scoring and categorization module that allows you to build a risk matrix based on the data that is on your core banking system that can feed into this particular risk matrix, and then give your customers a risk score that allows you to grade them or classify them as high risk, medium risk, and low risk, allowing you to focus on those high risk customers. At the bottom, the system gives you a case manager, as well as a knowledge manager and a securities module. The case manager is really workflowing all of the alerts that have been generated by these three modules and workflowing them to specific users. Then the knowledge manager is our BI solution for the FCM solution. And then lastly, the securities module is really the module that controls the user access to this particular solution. Generally, what I do is I do a demonstration after this, but allow me just 2 minutes to play a quick quick video that will just enhance some of the things that I've said, and then I'll be open for some questions. Technology. Just give me a second.
According to the United Nations, an estimated $1.6 trillion is laundered globally through banks each year for criminal enterprises and terrorist activities. Whether you call it smuggling, smurfing, fraud, or terrorism, financial crime is a global problem. More than 99% of these illicit financial flows go undetected. One of the victims? Banks like yours. Trust in banks is falling, prompting regulators to focus more and more attention on them. Compliance costs for institutions are rising, now estimated to climb by 50% in the next 5 years. And since the global financial crisis in 2008, fines to banks that don't comply have totaled $321 billion. Online banking has only complicated the problem, adding new access points for criminals. So, how do you protect your business? Intelligent banking. Institutions must leverage advanced solutions and the cloud to quickly identify financial crimes, rather than trying to do it by adding more headcount. From the world's #1 banking software company, introducing Temenos Financial Crime Mitigation. Using AI and machine learning, it screens new customers and assigns risk levels based on their propensity to be involved with financial crimes. It then monitors ongoing activities, developing a real understanding of customers and their patterns so it can quickly flag unusual banking behavior. Temenos offers banks the industry's most innovative and cost-effective approach to financial crime mitigation. Institutions will benefit from a risk-based approach that applies best practices and delivers the lowest false positive rate on the market. Our software works in the cloud or on premises. Fighting financial crime will always be a challenge, but Temenos delivers watch list screening, anti-money laundering, KYC, and fraud detection to help you cut risk, avoid fines, protect your customers' assets, and safeguard your reputation, all while reducing your total cost of ownership. It's your best line of defense. Visit Temenos.com.
I will go to the chat box to see if there's any questions for me. Scott, back to you.
Thank you very much, Marcus. And there are a few questions that have come in that are related to AI. Maybe I'll just throw a couple to you right now. I'll put them together. With respect to AI software in general, and Matt, you can address this too when you come to your presentation. Does the AI suite need to be integrated into the institution's existing banking software, or does it work independently?
That's a great question, Scott. So I can speak for what Temenos has been doing. So we have integrated our explainable AI solutions as part of our software solutions. So when you purchase any of the modules that I spoke about, or any of the additional modules that I haven't spoken about for financial crime mitigation, explainable AI is part of that solution. So it's no need to actually purchase it separately. Clearly, there are some instances where you would have certain software and then you would actually have an AI solution that would be coupled with that. But from a Temenos perspective, we've integrated the explainable AI as part of our solutions.
Okay. And the other question was hacking. So if somebody wants to hack into the bank to get all sorts of information, that's great. They must see a really good opportunity if they can hack into your operations and make it do things it's not supposed to do. So is that something that you think about, that you incorporate as you design your suites?
Absolutely, absolutely. So we have got an extensive security framework that we've included with all of our modules, not just financial crime mitigation, because you can hack into our financial crime software, you can hack into our Infinity front office software, you can hack into our Transact core banking solution. All of those solutions are governed by a rigorous security module that prevents exactly what you just spoken about.
You can't imagine how happy I am to hear that. So let's move on now to Matt Leaney again and give us the perspective of what Silent Eight has been up to. And when he is finished, we do have some questions that I want to address as well that have been coming in. But in the meantime, I'll turn it over to you, Matt.
Brilliant, thank you. And thank you, Marcus. I think it's great to have two sort of different companies sharing their visions at the sort of same time, so that you can contrast and see the differences in what's out in the marketplace. So before I jump in, I do want to say thank you to Esther and to Faith and to Adam for inviting us to attend today. We've had so much fun with you guys planning this and getting to know you all, and we look forward to enjoying your leadership in the fin crime area and other areas in Ghana face to face next year. So I talked a little earlier about how we've got to change the game to win, right? You've got to move to advanced technologies to win at the financial crime game versus, I'll just call them the bad people to make it easy. The way to do that is to eliminate capacity as a concern. I said that earlier. Capacity is the #1 inhibitor. So I'm actually going to disagree with my learned friend Marcus a little bit, who said that you can't possibly do enhanced due diligence on everyone. You can. If you use AI, you have unlimited processing capability. And the more people you put through with the more data sources, with the more advanced tech, the more bad people you're going to stop. And what do I mean by stopping them? This is what AI can bring you in the financial crime space. It can bring the best of human beings and then go beyond human beings. And this is what I'm going to share with you now. This is a standard mock-up of an alert that a human being would need to adjudicate. You have your client on the left, you have what looks like a potential match in the middle, and your analyst has to decide, are they the same or not, and make their decision. So what does the analyst do? They write in, yeah, the name is kind of the same, but the date of birth is different. So I'm going to say this is false. For an AI to be effective, it has to do all parts of that. We talked about that earlier. This is how our AI works. It explains every single constituent part. Doesn't give you a weighting, doesn't give you a scoring. It gives you 100% transparency, auditable forever. And it normally goes beyond a fuzzy name match, which is what most human beings use to solve their alerts. So when we say an AI has to be explainable, this is what we mean. You've said it's false, prove it. I need you to prove it in case I get questioned by the regulators. Just saying it's false is not good enough. How do you go beyond that? That is actually, the adjudication is quite simple. The explanation is really hard. How do you go beyond human beings? I got a couple of examples now that relate more to the I side of AI, right? Everyone says they've got AI. Very few people actually do. What they have is automation with a little bit of learning. The I, the intelligence, the creativity that goes beyond human analysts, only very few people have. I want to share a couple of examples of where the true intelligence has helped our customers turn what look like falses into what look like truths. These are exact cases. We've just changed the data a little bit to keep the essence of the case, but not to share personal customer data in broad forums. So indulge me with a few of these cases. This case, the first name was not a match. The second name was not a match. The place of birth was not a match. The date of birth was not a match. I would suggest that most human beings say that's false positive. I would suggest that every risk scoring, suppression, weighting software says that's not a match, that's a false positive. But when you bring the intelligence in, changes the story. So the AI picks up that Alex and Alexander are similar, Anichenko and Anichenko are similar. Anyone could do that. That's simple, fuzzy logic. What the AI also picked up was the customer's phone number area code is from Belarus, which is where the watch list entity was born. Now it's getting a little more interesting. And even though the watch list entity didn't have a date of birth in World Check or whatever source it was, this one was actually World Check, even though their date of birth wasn't in World Check, the AI found it on Wikipedia and it exactly matched the customer's date of birth. So this part, the fuzzy logic on their name, is not that clever. This part is pretty clever. This part is really clever. And it has been creative in moving what looked like an almost definite false into what I would suggest is getting really close to a true. But the most important thing with this example is the AI doesn't decide it's true. It can't prove it. It might be a coincidence. I would suggest it's a hell of a coincidence, but it might be. So the AI, exactly back to your point earlier, Juliet, when you asked a question, if the AI can't prove it in a way that a human being has said you need to prove it, it doesn't prove it because it can't. So it cannot decide. But what it does is it says to the analyst, hey, take a look at this one. I've done a bunch of work for you already. Take a look, see what you think. I think there's something here. Second one. Last name, no match. Address, no match. Passport number, no match. This was actually in Texas, in the US. The first thing it picked up was that the first name was a match and it was Arbabsia. It wasn't Arbabsia, it was a very similar name. That's a very uncommon name for Texas. So now the AI is a little bit interested. Then it said, okay, the addresses aren't a match, but using my geolocation access, I actually found out these are really close by. And then I looked at the passport number, and it's not a match, but actually 7s and 1s are the only different characters. They look a lot like each other. So now I've got a first name that's rare and an exact match. I've got 2 addresses that are pretty close by, and I've got a passport number that may well be the same. Someone might have tapped something in, someone might have intentionally entered something different, but there could be something here. So again, any of these by themselves, it's not particularly smart. You have open source databases that have most common names in different countries. You could do the address thing on Google Maps, right? You can do fuzzy logic on the passport. So individually, it's not that smart, but combined, it's really smart, especially when the AI is choosing which avenue to go and investigate in. So it couldn't find anything interesting on the cell phone numbers of these people because they're both in Texas, and it already knew that. So cell phone numbers don't help. It had date of births, so it didn't need to go and find them. So the AI only goes to the almost infinite places it can go, looking for information that it thinks might help. And this last one's my favorite. This is where you start to combine transaction data with entity data. Dominic Hudson actually is an engineer that works for us. Again, not the real name, but everything else is identical apart from we changed a little bit of the addresses and obviously the MasterCard. But the essence is 100% the same. So Dominic Hudson, yep. Any old piece of software could pick that up. I mean, any human being would pick that up. Place of birth is Canada, place of birth is USA, completely different countries, although geographically, in terms of miles, it's not that far apart. They live in different states. Yeah, different states sounds a long way. Geographically, it's not that far apart, but I don't really have anything yet, right? It's a pretty common name in the US, both Dominic and Hudson. Many people who were born in Canada would go and live in Michigan or Ohio. That's not that rare. But now let's look at the transactions. We had a vast majority of the last transactions by this customer were where the watch list party says they live. So now I'm thinking, yeah, the name is common, but place of birth is different, but not that far away. Addresses are different, but not that far away. Look at the transactions. This person either lied about where they live, or they just so happen to spend an awful lot of time where a watch list entity with the same name lives. Could be a coincidence, probably not. Again though, AI doesn't say this is true because it can't prove it. What it says is, you guys might want to take a look at this. So those are just 3 examples of where true AI can go far, far above what a human being can do. And that is what we need if we're going to win. Regular software, partial AIs that focus more on the automation, lots of human beings, it's not getting it done. It just isn't. AI is the only thing that swings the pendulum to our side. AI does all the work for the analysts, all the investigation. Most of our customers see an average alert time drop into 12 or 13 seconds because all the analyst has to do is read the justification and agree, and it's done. AI presents language learned from the analysts. So if you have templated responses, if you have drop downs, AI presents back in that language. And the AI pushes it into whatever system you currently use to adjudicate your cases. So no training's needed. For the firm, you control it in real time. It's your AI. Every AI that we build is custom for each customer. Precision, off the charts. We did tens of millions of alerts last year. Never got a single one wrong. Ridiculous claim. Happens to be true. I actually wish that we made a few mistakes. It would give me a little more credibility when I share that number. Unfortunately, or fortunately, we don't make mistakes. Because if we can't prove it, we don't claim it. Uniformity. AI can't do anything that you haven't said it can do. It can't randomly decide that a 12-year gap in date of birth is sufficient when you've told it a 25 is needed. It's just not possible. Explains every single thing that it does. You want to change some of your parameters? change them in real time. You've got instant global rollouts. So this is my question to everyone on the meeting. What could you create for your firms, for yourselves, for your stakeholders, if you didn't have to ever worry again about capacity, accuracy, consistency, auditability, or control? I would imagine those are the things you worry about the most. Never have to worry about them ever again. What could you do? Industry press, depending on which ones you read, says the average solve time is anywhere from 7 to 14 minutes. Let's just say it's 10, right? What could you do if the average solve time for your alerts was 30 seconds? 12 seconds is our average for most large firms. What could you do if after sampling and testing and getting completely familiar with the AI, you allowed it to auto-close, whereby it does the same work, it makes the same decision, it provides its explanation, it's all auditable, but it doesn't need a human being to check it? What could you do with that? It's very different to scoring, suppressing, or weighting, because the work has actually been done, right? In jurisdictions where names are common, fuzzy logic around names doesn't mean anything. Doesn't mean a thing at all. The world is too complicated for that. Simple distances doesn't mean anything. 3,000 miles in my home country of Great Britain is a really long way. 3,000 miles in China, not that far away at all. You know what I mean? It's the same distance, but you know what I mean. So it has to be smart in which data it uses. What could you do if you had that in your firm? What could you do with those analysts that you would no longer need to adjudicate these regular results? What I think we could all do, bring the heat. I think we can start to win. I think instead of bringing a knife to a gunfight, we're bringing an air force, and woe betide any of these criminals that dare come to your institution. That is what I think AI can create. And with that, Scott, back to you.
Thanks very much, Matt. I think a great way to finish things up. We've had so much insight over the past few hours, and I know that I'm richer for the experience. Of course, there's always a downside, which is sometimes the more information means we go a little bit long. And so for that reason, we're going to do just 5 minutes to answer some of the questions that have come in. But I've checked with our hosts, and any questions that are that have been posted and that we can't get to in these 5 minutes, we'll go ahead and answer them offline. Excuse me. So I think maybe the one question I'd like to put maybe to Mr. Nkrumah. There's a question about the Electronic and Transactions Act 2008, which, being one of the principal laws, it's been in existence for over 10 years, and a lot has happened, especially with technology since then. I'm not sure whether in your capacity at the Bank of Ghana, you're in a position to answer this, but are there any plans from policymakers to amend the law to bring it into better alignment with the electronic evidence collection, admissibility, and things like that?
Is the law again? Which law?
Sorry? Go ahead.
You mentioned, you said the law. I didn't hear you.
I'm sorry, I was talking over you. You asked about the law?
You mentioned the law, but I didn't hear you well.
The Electronic and Transactions Act of 2008. It was asked whether this is going to be updated to reflect newer technologies.
Yeah, I think the new act that I talked about, the payment system law, takes care of all of these new developments that are coming up. Act 97, yes.
Yes, that does make sense. Okay, thank you.
Exactly. It was passed last year, and it takes care of all upcoming electronic transactions.
Okay.
Right.
And a question for Mr. Mehdi, whether the Financial Intelligence Center is going to help to train, what kind of training it's going to put out, if it is going to put out training to help the regulated entities to address these, all the challenges that we've talked about.
Thank you very much.
Can I come in here?
Yes, please.
Are you talking about regulate, for example, institutions that are regulated by Bank of Ghana?
Right. So
Yes.
the question is saying it's one thing to put out these requirements that the regulated entities have to adhere to, but will there be any training that's offered to help make an impact?
Yeah, that is the responsibility of the various regulators. For example, Bank of Ghana, we are in charge, we have a responsibility to train our institutions. Securities and Exchange Commission has that responsibility. And then the NIC, that is the National Insurance Commission, also has the same responsibility. But then we also require the management of these licensed institutions to train their staff in AML-CFT matters. So in our AML-CFT guideline, we have stated that the board, the senior management and staff of all institutions must train their staff. It is an annual mandatory affair. In addition, the Bank of Ghana will also periodically do some sensitization to inform them about latest development in the AML-CFT arena. For example, next week, we are training all our licensed institutions on transaction monitoring virtually. So we do that, but the responsibility itself is on the financial institutions to train, and we monitor it.
That's great, thank you. There was also a related question about training for the police, specifically whether the Ghana police are going to be receiving any training or education with respect to cybercrime. This may be something that they're doing independently, but if you're aware of any programs that are specifically aiming to train law enforcement on cybercrime, I'd love to hear about that. Actually,
as part of our sensitization, last year, for example, we did a general training, not only on cybercrime, but on other related issues on the financial system. And part of it was it's a full-day program that we train them on AML-CFT issues, on cybercrime, and market conduct issues. Last year, we did some training for the Ghana Armed Forces and the Ghana Police. And this year, we were going to extend it to the other security agencies like the immigration, etc. But this COVID came in and slowed down the process. Our expectation is that once the restrictions are eased, we will extend some of these training to them.
That's fantastic. And just to repeat something I said earlier, I think in many respects, this just shows that Ghana is actually ahead of a lot of countries in terms of what they're doing.
Oh yes, we are doing, you know, as part of the requirements to get ourselves out of the gray list, we are helping, even though the police, Ghana Armed Forces are not under us, we extend this training to them because we think we have some responsibility to bring them to speed, because they all use the financial system. So we have taken that opportunity and to do some sensitization. In fact, it was a national thing. We didn't only do it in Accra. We went to the regional capitals and met them and then did some sensitization.
That's fantastic. Last question, and I think you're on a roll, so I'll let you answer this one as well. Pretty straightforward. One of the participants has noted that they haven't heard a lot about prosecutions in Ghana with respect to cybercrime, money laundering. And the question is, are they regularly published? You know, and if not, you know, why not?
Yes, some of them are published, especially when there are arrests, etc. They are published and it goes through the process. But you know, prosecutions at the law court are at times takes a very long time, and as a result, we lose track of it. But some of them are published. Last year, for example, there was this Chinese woman and some other gangs that were involved in some money laundering, transferring some huge sums of money outside the country without authorization. They were prosecuted, but as I talk to you now, I don't know the outcome of it as to whether they've brought a conclusion onto it. It was handled by the Economic and Organized Crime Office. They handled that issue, but I don't know whether they've concluded on it or is still in, at the courts.
Sure. And sometimes these things take a long time to work out. Well, thank you very much. Thank you very much for that. And let me just say thank you to everybody. This has been a really fruitful morning for me, afternoon for you. Speaking of which, I know it's getting to be dinner time there in Ghana, so I don't want to overstay my welcome. And with that, I'd like to turn it back over to Adam for some closing remarks.
Thank you, Scott, and thank you everyone that's been with us. It's been an amazing couple of hours, and I'd like to say that we're happy that we embarked on this journey, and I'd like to say a special thank you to Silent 8. They were with us from the start, shared a lot of ideas. Shana and Matthew, how many Skype calls, Zoom calls did we make? Lots of them, and I'm sure that you're happy that we came to the project has been pulled off successfully. I'd like to also thank the Bank of Ghana and the Financial Intelligence Center and the Ministry of Finance. And thank you, Terminals, Marcus. You guys have been great, and I hope the audience enjoyed the entire presentation. So all the presentations. What we'll do after this is to share. We'll share upon request the presentation materials, so you can get in touch with Esther, and we'll take care of that. We're looking forward to this same level of support when we launch the bigger one, which will be in May, but we'll start to work on that from now. So this is also a call for partners to come to work with us to make it a more successful event all across Africa. And thank you, everybody. I look forward to seeing you again. Bye-bye.